So you were trying to go for
break
this
the neckline.
The neckline down
yeah,
here.
Trade. Well, the entry criteria was a 23.6 fib neckline, so I got in late.
Okay.
And then the profit target was based off of the previous level of support, which is the zero line.
Okay.
0% fib.
The 0 fibs is down here. Okay.
Yeah.
Okay.
So I got out early there too.
Okay, so let's say you got out there or whatever, right? Same thing. So your targets are the same. Keep the targets, but now using what you've learned from volume spread analysis, you would have gotten out not here. You would have gotten out when volume told you to. And look, beautiful signal right here. Effort to fall.
Increasing volume.
Effort to fall failed. Right there. Nailed you the bottom. What a beautiful, beautiful chart. Like, just absolutely beautiful. So you can continue doing what you were doing, but you can see how just adding a few extra things. Right?
I really see how volume's going to help me with the exits.
Yes.
I really see how volume's going to help me with the exits here and having some other rationale for staying in rather than just closing for where borderline. Sometimes it's arbitrary.
Yes. No, I totally understand. That was always the missing piece for me. Like, I spent, I've been doing this for 11 years. I spent many, many years trying to figure out how do I do this. Like, and I tried everything, but this is so far what has remained from all my research, is that this volume spread analysis allows me to pinpoint the likely areas where they're getting in and out. And again, that if they break the support, it's going to be under high volume, right?
Mm-hmm.
Right. So that price is moving really quickly in your favor, and all you're trying to do is trying to maximize your profit, right?
So then, what's the specific criteria there? It's that last bull wick is bigger than the last four, but even though there is. The price is going to turn because the next green candle resulted in a very small movement. That means there's an exhaustion. The bulls are exhausted. That
they were buying in this candle when they were stopping everyone out here. That's where they were buying. Their orders were all in here, right? They set all their orders in here. This equips you to see after they do that stop hunt, right? What they're likely planning to do next, right? And it tells you the environment, because even though they can and will try to control markets for certain periods of time, they're likely not going to fight it. So you can see here that they found that the market was ripe to bring up, and you can see that people who shorted here, they maybe got some, but then they got slaughtered to the upside. And then people who went try to go long here, they lost all their profits. And this is why it feels like the market is always taking money from you, because it's constantly shaking you out. But if you use the volume spread analysis, you're allowed to, you're able to identify what those guys are doing, because those are the guys that move the markets. And it's just the probability, right? It's just, all I know is that when you have the signal, there's a probability that they're getting out. So we should play that probability and get out as well. So I just wanted to show you, do you see how, the risk reward ratio, because in your example, you had 9.7 stop, right?
Yeah.
Right. You can see that even with the smallest one, even the smallest, it was 3 times smaller than yours, right?
Yeah.
3 times smaller than yours. And look at the risk reward ratio on that one, on the exit. That's 5.
Yeah.
Yeah, that's 5.6.
5 times greater?
I believe so. Is that right?
5 times, yes. 18 divided by 3.
I'm sorry. 18.29 risk reward ratio.
Yeah, it's 5 times greater of a risk reward ratio. Yeah.
Yeah. Amazing, right?
But you know what? I think at the very fundamental, at least what I'm getting from this is VSA is going to give me justification for staying in trades longer.
Yes.
Because you learn your tendencies. My tendencies are I usually didn't stay in the trade as long as I could have, because
Yeah.
That's
Well,
what I mean.
that
That's
is a
what my
very
screen. That's what my account is telling me. So
yeah. No, that's actually most traders from our studies, and these are our own personal studies when we studied traders, because we were, I was teaching people and Aman was teaching people. We did our own studies with traders, and we found that most of the traders, they were great at picking bottoms, but they didn't know when to get out. They weren't able to hold it. It's harder to go for profits than it is to take your stop loss, actually.